What's up, guys? This is Omar Best, and welcome to our very first podcast. And today's topic will be Facebook. Facebook is it's a hot button with all of the offline media, with the online media. Everybody's talking about how the price of the Facebook stock has went from $45 to almost $25 in a matter of 2 weeks. We even have guys who are trying to file lawsuits claiming that Mark Zuckerberg knew that the stock was overvalued and all of this stuff. And let's just get into it. I mean, let's talk about the Facebook IPO. First off, okay, the initial price of Facebook stock was $45. Okay. And if you feel, as an investor, if you feel that the Facebook stock is overvalued, as an investor, you have a choice based on your research and on your investment criteria whether you will purchase the stock or not. And obviously, many investors who felt like the stock was overvalued exercised their choice. And it's evident because the stock price went from $45 to $27. So, how is the price of stock set? This is uh, this was a confusing concept when I was learning about stock market investing. How the price of stock was set was very confusing to me. Okay, and I would imagine that it's confusing to a lot of other people out there who are just getting involved in this in the stock market or what have you. But the price of stock, it's based on buyers and sellers. It's based on the buyer's willingness to buy and at what price, and the seller's willingness to buy and at the seller's willingness to sell and at what price. So let's just think about it like this. When you go to a store, what do you do when there's a product that you are looking at that you feel is overpriced or overvalued? You don't buy that product. You will say, "No, that's too expensive. I'm not buying that. I can find that somewhere else cheaper or whatever." And on the other hand, what does the store do when buyers are not buying the product? They eventually lower the price. This is the same thing that's going on with Facebook. Okay? The same thing. So, right now at the moment with Facebook, there are more sellers than buyers. And the sellers are lowering their price on their stock to get buyers to buy. And another factor that a lot of people are not putting into they're not really talking about this is that a lot of the original stockholders of Facebook stock did not pay anything for the stock. They were given the stock, they were given stock for services because when Facebook was first starting out, they didn't have cash, the cash to pay all of their employees or to pay different people who did things for them when they were just starting up. There's one guy who was a painter who was given Facebook stock, and his stock is valued at about $100 million, 100 to $200 million. I will include a link that you can go to check this out. But a lot of these guys did not pay a dime for the product. So with that said, if they didn't pay a dime for the stock, any price over zero is a good price for them. Okay, so what that means is these guys, if they're trying to really sell off their stock, they will go as low as $10 to get rid of the stock. That's a $10 profit. And let's put it into perspective. I have 200,000 shares and I'm selling it for $10. Come on. You know, this is the other thing that people have to keep in perspective, that a lot of the stockholders are selling and they don't really give a damn about what the price of the stock that they're selling at. The other thing that people have to look at is that a lot of these guys that were stockholders in Facebook were paper billionaires and paper millionaires. So what does this mean? This means that on paper, because they were owners of Facebook stock, they were worth, on paper, they were worth $1 billion, or they were worth multi-million dollars, whatever. But this was on paper. They couldn't actually go to the bank and reach out and touch $1 billion in cash or $1 million in cash. So right now, these guys who were the original stockholders in Facebook, they're trying to cash out. They're selling their shares so they can become cash billionaires and cash millionaires. I mean, it makes sense. If I was an original Facebook employee who was working for nothing but Facebook stock, hoping that this company will make it 10 years down the road, you are damn right that I'm going to cash out and get everything that's coming for me when that time comes. So I don't blame these guys for trying to cash out, to selling their shares so they can become actual cash billionaires and actual cash millionaires. So in conclusion, number one, as an investor, you have the power to choose whether you will buy or sell an investment. Number two, the price of stock is based on buyers and sellers. Number three, in the case of Facebook, you have more sellers than buyers, so the price of the stock fell from its original IPO price. It's nothing more, it's nothing less, it's not a conspiracy. And by the way, I do feel like that Facebook is a good company. I think that over time they will uh, become very very profitable company, and I think they have the potential to become the next Google, the next Mac computer. I mean, I really believe that. That's just my opinion. So, right now, of course, they're going through some, with regard to their stock price, they're going through some growing pains, but I think that the company will be all right. So I wouldn't lose all confidence with regard to investing in Facebook. Guys, this concludes the very first podcast episode from How to Be a Stock Market Player. I will see you on the next episode. Wish you guys all the best. Check out howtobeastockmarketplayer.com when you get a chance. Thank you for listening, and I will see you soon. Peace.